Welcome everyone. I am delighted that you're here. And tonight we have a very special, this is really special for me, this is really Jeff Killian's show, and I want to let you know, I met Jeff several years ago, and we've always been trying to find ways of working together, because what I constantly see from my end, when a trader starts becoming a really well-balanced, emotionally sober trader, they often discover they really don't know how to trade well. They don't have the trading knowledge, and it's just alarming to see how few people that you can refer to so that you know and you're comfortable that they're going to be taught exquisitely well. And Jeff and I started getting to one another, and I started recognizing that Jeff, first of all, he's an enormously successful trader. He's got the kind of dream that everybody has of a dream. He's down in the Dominican Republic right now. That's where he's speaking from, and it's beautiful. It's in the Caribbean. It's tropical stuff. He's got all that stuff that so many people dream for. Well, this guy's made it a reality, okay? And what you're going to do this evening, what you're going to see is how Jeff does this and how you might go about getting there yourself, okay? Now, this is where really the knowledge base, and I want to make sure that you folks, the people who basically are following me, I want them to know that there is this level of competence out there that they can truly master methodology and improve whatever they're doing. It can be there. Jeff's a master of market structure. He's been making fine money recently in these turbulent markets, and he's going to show you how to do that. Okay, and what I want to do is basically, without any further ado, I really want to give this over to Jeff because I want to listen also. The key there's one quick homekeeping rule is that we're going to hold questions toward the end. That doesn't mean that you can't type in questions, but we've just found over time that questions tend to disrupt the flow of presentation. And Jeff's going to be around if you need to talk to him, if you need to ask questions. He's going to be around, but he's going to show you what he does. And then if you're smart and alert and being a great trader, please ask the questions. It's a great opportunity. And yes, to the rest of you, this is being recorded, and that you are going to receive a copy of it. Okay? So what I want to do is turn this over to Jeff. And Jeff, I welcome you. Thank you. And by the way, just to let you know, Jeff doesn't like to do stuff like this. But what happens is that I ask him, I like to only show really high-end trader trainers on these monthly programs that I do for trader training, and that it just so happens that I wanted Jeff, and he did me a favor. So I'm getting the favor. And Jeff, please take over.
Well, good afternoon, everyone, or good evening, depending upon your time zone. My name is Jeff Killian. I am the Chief Market Strategist for the Inside Technician. And I want to thank Rande Howell for the introduction and his wife Dolores for organizing this webinar for the presentation to all of you today. We have a lot of information to cover, a lot. Very comprehensive, 30 minutes covering a lot of material in a short period of time. What I will present to you today is some of the very basic elements necessary to become a successful trader. When I say successful, I'm really talking about profitable. There's a lot of people out there who've been trading for a long time, and they have certain methodologies that they've been using, and those methodologies may or may have not brought them in the kind of results that they want. In any trading methodology, in any local area, or any region of any part of the world, the major component of that methodology should be about how to find the largest players within that marketplace and then track them and trade them at the most precision moment. This is exactly what we do here. Our primary market that we trade every day is the S&P 500 E-mini futures because of the liquidity, meaning the ability to get in and out at will, get the best fills for the prices, even in a fast-moving market, and be able to book profits and then wait for another opportunity. In trading, your greatest positional advantage as a professional, as a real money maker, is patience and waiting for the trades to come to you. if you want to be successful, if you want to be a moneymaker, you really don't have any other choice with any methodology that you're using. You have to find a methodology that will stand on the sidelines until a true high probability trade comes your way. And until that happens, you're on the sidelines and you do nothing, because chasing a trade is surely one of the most disastrous things that any trader can do. And if there's a couple of you out there, more than a couple, that can relate to that, well, I did too when I first started out. Real quickly, I took 3 years out of life, and I basically isolated myself. In the last 6 months, I stayed up all night, every night, writing code to learn how to systematize what I came up with. And at the end of it all, I realized that it was nearly impossible to systematize everything, and it was better to learn a methodology that I had created only unto myself and take that and use that. Now, that was over 23 years ago. In the 20 years that it's been operational, not much has changed. It's all about finding the largest institutions, the largest offshore hedge funds, the people who can and do move prices from one level to another, and fade those moves at exactly the right time at the right place and capitalize on their pre-orchestrated moves so that we can make the lion's share of the money in a short period of time. Now, first I'm going to present you with how to identify the higher probabilities of a market turning point from up to down. When the market is turning around and going short, every trader knows that they have the most opportunity to make the most amount of money. Everybody knows that, even a beginner. And then, where prices may find support, how to know how to trade to the upside within an existing current downtrend. So prices turning back around, how to identify that on a daily chart, and then when you have found daily support and prices start to move up from that level, how to trade long, as we did today in our trading room live, recorded, posted on YouTube. And one of the 2 trades I took brought in 4.75 points for over $4,700 today trading 20 contracts. So let's get to work. I would assume that everybody can see my screen just fine, and can I get a confirmation on that before we begin?
I'm waiting.
Okay.
We've got confirmation. Yep,
okay,
we've got a bunch of yeses.
Okay. Okay, so here we are with the correct application of technical analysis. The day that we're referencing here is 4/4/2014. Now, what we do know at this point, we have substantial futures volume that's coming in at this point. Now, this is not just because of rolling a contract from one month to another. There is a substantial day down here. With the correct application of trend lines from this base level here out to this point here and broadcast it out, we nearly have a violation on this day. So price chart pattern-wise, volume in, long day down, near trend line confirmation to the downside on a break. And we have a few levels that are laid out from the past here as prices traded up to act as support if prices should turn right back around. Now, looking at this in isolation, it doesn't necessarily mean a lot, but I do know one thing. I have lower prices and higher prices. I know that the market has already achieved not 1, not 2, but 3 all-time highs. And I know that strong volume has come in, and I know that from experience it's not necessarily rolling the contract from the past to the current month. So I'm looking to see how this trend line gets violated, and I'm looking to see how prices trade through or not through it and then down to support to catch a market turning point in its infancy so that I can make the most amount of money in the fastest amount of time. Right from here, looking at the relative comparison of the volume, the subgraph below, to the prices, I move right to the money flow index. Money flow index is a 14-period short-term smart money tracker to determine what's the reality of the strength of the smart money behind the prices. In this case, lower price, higher price, connecting a trend line, and then higher indicator, lower indicator level, an official negative divergence as compared to the prices. Again, higher indicator level, lower indicator level. And what is this really saying? What it's really saying is that there's something going on inside prices that neither most of you know and can act on, and only a few chosen people really know how to use to be able to determine where this market turning point can happen, how I can pick up what I need to get. So at the end of it all, an official negative divergence on the short-term money flow index as compared to the prices, obviously indicating that these prices are trading up on inflated highs. Well, what is an inflated high? It's exactly that. It's prices that are trading up on a lot of weakness. We have the wealthy people out there on the balcony, on the deck, on the restaurant in the Hamptons, and everything is good. Everything is great. Everybody's getting pitched the plate of the day from the broker, the dealer, the financial planner saying that, hey, you got to invest because the market's trading up. You got to invest. It's time to invest. And so they do. And that's what's driving these prices up. It is not, I can guarantee you, the people who control price movements. They are the people who feed off the herd mentality and take the money from them and put it in their pockets. We know better because we have a very strong short-term negative divergence that what? That there's a lot of pent-up selling pressure that has not yet taken place in the form of the future directional movement to the downside that the prices have a high probability of going in. You get that, and then you go right to a longer-term money flow indicator, like the Chaikin money flow, 21 period, and look at the decided difference between the slope of the line and this negative divergence as compared to the upward sloping trend line, which is already static. You have a marked difference here. So looking at this as compared to the initial money flow, we now have a confirmation out of a secondary smart money tracker as compared to the prices, indicating that the insiders that are within the market every single week are leaving. So basically, we have an enormous amount of selling pressure because they have sold off and off and off. That has not yet affected the prices because they're trading up on the herd mentality, still buying in. Behind it all, things are about to change rapidly. And that rapid change is what you need to learn how to capitalize on. So fully being aware of the higher probabilities of this market turning point, we go right to the stochastics momentum index, and we look at one more negative divergence where the height of the strength of this indicator was located here as compared to now here, indicating a market turning point in play and waiting for the cross from above to below the signal line in order to be officially market-wise changing the trend from one direction to another, that being the downside play. After the stochastics momentum index fires the high probability setup to the downside, we're moving right into the MACD indicator, our chief trend confirmation, official trend confirmation indicator. It takes a lot for this indicator to fire. It doesn't come easily. And here we have one more negative divergence out of this indicator telling us the same thing, that we have a lot of pent-up selling pressure that is yet to be released in the form of the prices that will trade to the downside. You are looking essentially at a high probability market turning point in play. Exactly how to identify it. After this, and waiting for the final confirmation out of the MACD to be officially out of net neutral to short, we're moving right into the Chaikin oscillator, which has one more negative divergence. Well, there you have it. One more from here to here. What more could a trader possibly need in order to be set up, geared up, loaded up to be short? I'll tell you what they need. In a confirmation from exponential moving averages. For those of you that have traded off of 4, 9, 18, 50 period, 200 period moving averages, the unfortunate aspect of those is that you're basically using a simple moving average, which is an average of the series of prices over a specified period of time. It does not include any calculation whatsoever on the most recent volatility and the most present larger range bars that can move quickly from one direction to another, as in this case. The 4 and 8 period moving averages, exponential moving averages specifically, will wash away that volatility because an exponential moving average is geared to have an acceleration factor into the most recent data in order to catch those market turning points running and give you the final confirmation that you need in order to trade short. So as we look at all this, we know we have a high probability market turning point set up, which is where it all begins, even before we get into real time. And we know that we just need a little more to come our way. And as we go through and now move into the future, it's clear to see that the trendline violation was broken and we achieved a support level right here at this point, which was then violated again to the downside, another trend line here, and prices essentially found support at a level that I laid out on the nightly report here, and it was broadcasted out into the future. Prices do move in levels, people. As the prices trade up, the levels that are laid out like a stair step on a fire escape are found when prices turn right back around and trade to the downside. In this case, the most previous recent session here at this area on just 414 found the support level that was laid out all the way back from 212, 2014, broadcasted out. These levels are laid out every night on the report. Now, what I also know is that I have a continuation of volume that's come in to the downside for the sell-off, right? As compared to the equities, which doesn't show it. Here's the volume that starts it all off. Here's more volume. And then we have some breaks volume in between, finding the support area, a temporary halting place within the U.S. markets. With that in mind, and an up close, I'm looking for either the up or the down move. Knowing when to draw these levels within the daily charts as the prices trade down and find them is your opportunity to be able to find the temporary stalling point within a market sell-off and then trade long. So either way, long or short, you're completely covered all of the time on any given day. The most important thing for you to know, based on end-of-day analysis first, is where you stand every single day within the U.S. markets. This is, without a doubt, the most important thing. After that, you cross the bridge from end-of-day analysis into real time and make it as seamless as possible and use the same exact indicators and techniques in order to trade as a professional. And that means highly profitable. Getting into what happened between yesterday's open and close and now today, we knew that there was a high probability that prices could trade up or down, and we were prepared to trade in any one of those two directions this morning at 7 a.m. when that trading room opened in order to take advantage of it, because we're always ready to trade long or short. So let's get into the real-time breakdown of what happened today, one of many trades that were taken by us here at the Inside Technician, and show you exactly what we were looking at. You're looking at a 15-minute chart, a series of 15-minute charts to begin with, and I want to start with the money flow index right here. Now, we know that when we're talking about drawing trend lines within our charts, we want to relate to opens or closes and closes or opens to connect to our data points. We know from experience that in drawing these in indicators, we want to go from peak to peak or from through to through, depending upon the bias at the moment. Since we were prepared to be short or long, we knew that short play was out of the picture when prices hit support here, created this new level, and started to trade up momentarily. At that time, we were looking to take advantage of getting into the trade in order to be in long if enough volume had come in on the 1-minute chart. The 15-minute charts act as the high probability setup confirmations in going through all of them, and no trade will be taken without all of the indicators firing If one is out of the equation, the trade is not taken. And if they all are a go, the only reason why we're in that trade is if the right amount of volume comes in the 1 minute chart at the precision, in this case resistance level, traded through to the upside by the smart money because of the contract sizing that's come in. It's undeniable that there is so much of a force, real power behind the move, that it's impossible almost to believe that it wouldn't go. So here's an initial trendline violation here, showing you clearly that the things had changed and the smart money is getting through this area here, just like prices, but now in indicator format, getting through that confirmation to be long. Turns back around, and what happens? Right back here, base level here, and you have the additional trendline confirmation right here just before the level is penetrated to the upside to consider being long after price is traded through resistance at 1826.25, right? And turned it back around and clearly found it not even reaching resistance that had turned to support at 1826.25 again. Trading up from that area and looking to get through the 15-minute level on the 15-minute chart now at 1830.75 to cross over to belong. Now understand, the 15-minute charts are the approximated level for the 1-minute chart. The 15-minute chart levels may not necessarily be the exact precision level on the 1-minute chart, but it is a very close approximation. Now, knowing this and looking at what happened here, you can clearly see one confirmation, and if you really want to get into it, you could do this right and be a top technician and see another trend violation right here at this area. And there's your third clear, officially, to be long on the money flow as compared to the volume. Here, in this case, from there we're going right to the Chaikin money flow, and we can see that I have chosen this peak as compared to this peak, almost a horizontal trend line, slightly sloping down, and then this through to this through, getting out of an actual pattern within the indicator itself to the upside, and then full upward momentum. And I can guarantee you this was long before this level was ever crossed. The smart money had come in and was steamrolling to the upside with an enormous amount of volume behind it to bulldoze right through the 1830.75 level. Next, getting through that, let's look at the SMI. In this case, although at the upper region, okay, a turn around and then a final crossing below to above again, what we do know is that when prices trade into upper areas, new highs, out of trading channels, and a secondary here, it is not uncommon for this indicator to remain in overbought territory, but the cross again from below to above was clearly the thing that had established the signal to trade long. And for those of you that were watching this morning, you know very well that the initial trendline violation here at this point was a clear signal that things were getting above resistance at 1826.25 right here. Am I inspiring you to trade, Randy? I hope so. So right after that, let's take a look at the MACD. And here you have a trend line that's connected from here to here, and the violation here at this point. This is just while this bar is trading up, and this happened before. The cross from above to below never happened. The touch is almost there, but you were clear to be long even before the bar started to trade up. And finally, looking for the last confirmation, the exponential moving averages right here. Cross was way back here, through resistance, once again touched, didn't cross, and then up, getting through, fired a signal long before the level was ever crossed from below to above. So to break it down at the end of it all, you're seeing a lot of volume that's coming in at this point, right here. Look at it. There's over 160,000 contracts traded within that first 15-minute bar between here and here. A lot of contracts. Smart money coming in. The stats for the trade are as follows. 1830.50 resistance, nixing out the blow off to the upside here on this 1-minute bar pivot point high right here, and getting in at the 1830.75 with, where's the volume? There it is, right there on the same exact bar they got in. Can you see it? It was 19,274 contracts that were traded within that bar. That is some serious money behind the move. With that kind of tide behind you, real-time trading, you can pretty much close your eyes, set your stop at a reasonable position, and look to get to predetermined price profit targets that have been laid out as we do well in advance, long before your every trade is taken. This is redundancy. This is the way it has to be done. Everything has to be fully planned, known, examined, ready to act on at a moment's notice, so there are no surprises. This way, it is the fully congruent trading environment where you can act on the actionable intelligence that the market shows you, that when the market comes to you in the form of a true high probability trade, you take it and you take the money and you put it in your account and you say thank you because you've earned it. 15 minutes before 7 o'clock this morning, I had to do all this analysis, levels up to the downside, everything, 15-minute charts, daily levels, everything, before I could ever consider trading anything. And this is why this methodology to find, track, and trade, the real smart money is so highly profitable. So to finish it up here, major resistance was established at 1835.25 right here. I was in here at 1830.75 at 9:30 a.m. for 20 contracts. I rode that up right here and got out here at 1835.50. Why? Because I wanted to get out on a rally. Shortly after that, prices traded up somewhat, turned back around here, and later turned right back around and traded down. So getting out at a predetermined price profit target, not getting greedy, locking in the trade profit is exactly what you need to do. Okay, so as we go through this here, we look at, I have a correction here, we look at the stats, we look at the daily numbers, and we look at how we can do what we need to do in order to make all this happen. And again, it's all about staying on the sidelines and waiting for the true high probability trades. This trade brought in from 1830.75 to 1835.50, 4.75 points. That's a $237.50 gain per every contract traded. Times 20 contracts traded was a net dollar gain on it for $4,750 recorded live before the world posted on YouTube. So the proof is undeniable. The method is solid and the results are there. What we will do is offer you the best education that we can so you can empower yourself, so you can take control over your financial future, so you can have a lifestyle change that you want. Everybody knows what their own is, what you really want out of life, and start getting more of it. Dolores, if you have a minute, could you fly in the Nightly Market Intelligence Report offer, please, in the chat area? You're going to see an offer, a click through to one of our pages within our website for the Nightly Market Intelligence Report. It is a way to get to know us and see how we go through these demonstrations and how we make a smart money bias market trading call so that you know where you stand and can follow along with us every single day. And that's every single day within the U.S. market, so you know where you stand. And from there, you learn what we teach, and from there, you take that, and it doesn't matter whether you trade stocks, NYMEX, gold, wheat, doesn't matter. It's all the same. It's all about identifying the smart money and a true high probability trade behind it and taking that and running with it. I know included in this offer tonight, before we turn it over to questions, is an emotional regulation skills course. This is a webinar that's going to be included for everyone who signs up for a 14-day risk-free, unlimited risk-free trial tonight at a nominal fee. So what Randy is really talking about here is the emotional regulation skills course teaches you how to manage emotion. And this is what you need when you're in the moment to trade, as in this area here, and to manage your emotions all the way up to the price profit target. So you can stay cool and calm in the heat of the moment. You learn how to move from trading performance, being hijacked by your emotions, to managing the intensity of the emotion, okay, before it can do any serious damage to you. I mean, he believes it is the first essential skill taught in the trader's mind and skill system of learning. Breathing and self-soothing skills are really taught so that you can interrupt emotions before they sweep your trading mind away. Now, training is applied directly to trading situations that cause you the most problems, including evaluating setups and entry points, pulling the trigger, being in the trade, and losing a trade. I mean, literally, you're going to learn to train your brain to trigger a state of calm as you see the stress beginning. So this is something that will be included, this webinar, within anyone who signs up for this unlimited risk-free pass tonight for 14 days. Every night it's a 20-minute recorded video that goes out. That, again, goes through the Dow, the S&P 500 equities, and ends up with the end-of-day updated and real-time charts of the E-mini futures. So it's a very comprehensive, broad-based, covering the entire U.S. territory markets. Very, very comprehensive, very in-depth, like we just went through. 2 equities markets, futures, and then getting right into the primary market. This is something that nobody else does. So we have an incredible offer for you tonight. I want to tell you this by my pleasure to present this to you. The guarded secret of the world's greatest traders. I don't do this. I don't normally give away this much information. But there are people who will take it and will run with it. And there are others who won't. If you want what you want the lifestyle change, you need to make more money, you need to provide for people in your life. To my knowledge, this is really the last frontier that still exists to be able to learn how to do this as a professional and outperform the market averages by a wide margin. Do we have the link in the chat area? 2 people that click.
Yes,
4
we
people
did.
that click through. Okay, I think that's pretty much all I can say for now.
Well, the one thing I will say, Jeff, is this, is that if you go to my website and buy the program that I'm pitching in, and this is just something where, understand, I want people to check out Jeff, okay? That's basically what I'm really saying. If you go to my website and you were to purchase that, you'd pay $200 for it, okay?
How much?
$200.
Hey. Wow.
That's the cost in my catalog, and what happens is I have enough belief in what Jeff is doing to say that if this motivates you to move to just check out Jeff, then I am blessed. Okay. So anyway, the point is that I really believe in this man you've been talking to. He has a kind of intelligence and a kind of genius that just is incredibly uncommon. And the thing is the time that I've known him, I've seen him produce numbers like this over and over again, and really wicked markets. And his genius is, it's just not technical analysis. What he's doing is this, that he's going, okay, that's technical analysis. That's history, observation of history. But what he's really doing is he's adding the wild card in there. He's looking at what smart money's doing and how smart money's generating markets and how you go about taking advantage of those. It takes it up a scale or two. And so that's my encouragement. That's my enthusiasm in there. And I'm guessing from here it's going to be kind of a question thing. Are you ready for questions, Jeff?
Yeah, I'm okay with questions. Sure, why not?
Okay. And the only question with Dolores and I are going to have to do is, I'm going to try to read them with my bifocals on, or is she going to read them? Okay, here's the question. You draw your downward trend line on the CMF, but when price then moves above that line, do you redraw your line? When does it become a long?
Okay, on the check and money flow indicator, as well as money flow indicators, every time a new peak is established and prices do or don't trade down, if the indicator moves back down and a new peak is established, we'll go ahead and draw another trend line from the base level out to the new peak and wait for the new trend line to be violated to the upside.
Okay, I hope that answers the question.
Okay, hang on.
We're going through stuff. Okay. Is there a reason why you focus on the EFs versus the TFs?
The EFs versus the TFs.
Yes.
Yes.
Okay, yeah, the E-mini futures, absolutely. Sorry, I kind of broke up there for a second. Yeah, I could trade anything I want, and I have traded a lot of different instruments. I focus on the ES because of the liquidity. It's gone up every single year. The ability to get in and out at will, and get your fills right on the money, is even in the fast-moving market, is nothing short of incredible. When you have non-liquidity, meaning that volume has dried it up, right? Whether you're trading stocks, forex, which is deadly difficult. Stocks, you have the overnight risk as well. In the E-minis, you don't have the overnight risk. You can trade the overnight session, right? But you don't have the open risk, meaning that when stocks close at 4 o'clock and they open again at 9:30 Eastern Standard Time, if you trade up 20 points, well, and you're short a stock, the equities market opens and shoots right up 250 points or gaps right up, well, you're automatically at a loss because you have chosen to let yourself take the overnight risk. In this market, you don't have to. You can get in and out. You sleep at night. Side advantage.
Here's another one. I subscribe to the January Maverick. Is this ongoing from that? This is from a previous thing that Jeff and I have done together. So Jeff nor I may have a very perfect answer here, but Jeff, take a shot at it.
Okay, the Maverick Project was something that was created to form a union between a proven professional from the psychological side of trading and a proven trader as myself, so that we could basically combine forces to allow people to get it right the first time. This nightly market intelligence report that you can subscribe to tonight is based off of solely what the InsideTechnician.com has for a entry-level product for you to be able to follow along, 5 nights a week with a 20-minute pre-recorded video, and you get a complete breakdown of the current state of the U.S. markets, and then you get real-time trade breakdowns. So this is an entry-level product that is not directly associated with the Maverick project, but is in fact integrated into the entire mix so that you can learn at your pace how to be able to do this.
I will add to that is that the truth is this is just one of the most professional traders have some sort of feed where they're getting information where, before they do their charting, they want to really have a substantial basis from what they're doing it. This is just simply what a really good trader is going to be doing to be able to get the kind of information that he needs to be able to do the charting, to be able to really look at what they want to be doing the next day. Every professional trader is going to have that. Another question, this is an interesting one too. With your trading so profitable, why are you selling web room space? Why not just trade? What an interesting question.
Yeah, and it is a valid question. It turns into a personal thing. I don't have to do it. For 10 years, I didn't talk to anybody. I was a total recluse. And because of, are you there?
Yeah, I'm sorry. I thought we lost you there for a second.
No, I was thinking.
Okay.
And because of a change in my life, a very personal change, and because of a lot of people who were close to me, who knew me very well, not a lot, 3, maybe 2, telling me that, you should really consider this because you have a talent to do this. I considered it, and after a while, I decided to give it a try and see how it would work out. And so far, it's worked out beyond anything that I ever imagined. I believe that if you're a leader, which, you know, I'm a very humble person, but I believe that I am, and I believe, you know, I am probably one of the greater traders in the world. If you really know how to do something, right, maybe in some way you should have a responsibility to empower other people to learn how to do that too, so you can create another leader. And then maybe that person can just find a way to create another one, in a way of maybe giving something back. Maybe at the end of it all, touching it lightly, it has a lot to do with, you know, my spirituality and my belief system. And so at the end of it all, I decided to do this. And I can tell you that I get days when I get questions from people and resistance from people where I'm ready to say, you know what, I think that it's time I'm just going to go back and trade because I don't have to do it. I have enough money. I live here on the beach. I have a beautiful penthouse. I've got more property. I'm good. But I do it because I love to do it. I love changing somebody's life from panic, confusion, the inability to get what they want out of life to, you know, doing this and living the kind of life that they want. Because I know at the end of it all, it's all going to find me back anyway. I hope that makes sense to everyone. It makes perfect sense to me. That's about the best I can say.
I'm going to add to it, Jeff. I'm actually going to give some history to this. There's a guy by the name of Eric Erickson who produced a lifestyle, understanding of lifestyle and the growth of the human being over time. And one of the stages that's enormously important is called generativity. And there comes a moment in a person's life where they've done it. They've been okay. It's kind of like a Bill Gates. You know, you're the world's richest person. What else are you going to do? Okay, and something gets a hold of them where they get this notion is that they start needing to give back to people and to things that which that has been given to them, and it's actually a developmental moment in the growth of a human being. And I see this with, I see it with Jeff. Is that, no, you're right. He doesn't. He's got a great penthouse. He's got a great place. You know, I'm talking to him today, and I'm having a weather change coming here in North Carolina, and he's sitting at the beach at 75 degrees. It's a beautiful day. La 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 la. At the same time, is how do you impact people? Okay, there's a drive, and if you don't do that, things go amiss. And so what happens is Jeff's just going through one of those moments where generativity, where it's not just the money. Now it's like, how do you teach a man to fish so that he's no longer hungry? Okay. Another question, Jeff. Jeff, why don't you have? What if you don't have the opportunity to buy at the preferred price?
If you don't have the right in, okay, then according to the way the chart pattern is structured, the indicator formations are set at the precision entry. If you have a fast-moving bar, for example, which I think where this person might be leading to the upside, it's just blown right through the resistance level at 1830.50 and is now up, you know, 3 points. You can't chase the trade. Forget it. You're going to have to wait for it to retrace back to the downside. Get the best fill you can, maybe 50% retracement to the downside of the up move, get back 1.5 points, and go for it.
Yeah, that one just left. You just wait for the next one to show up. Next one, how long did it take you to work up to 20 contracts? Because I'm freaking with 2.
About 5 years, to be very confident about it. I mean, 20 contracts right now is my minimum. I trade 20, 30, 50, 70, and 90, depending upon, you know, how the market may be selling off or trending up, the strength of that trend, based on the smart money bias market trading call. If the smart money bias trading call, let's say we're in market net neutral right here, we're looking at a daily chart, starts to trend down like it did most recently, and then we have a major market sell-off, we could be at a smart money bias market trading call level 8, probably level 9. That's a major sell-off. At that point, if I have a high probability trade set up to the downside, or if the market is trending up sharply and I have a high probability trade set up to the upside, Well, I'm not trading 20 contracts anymore. I'm trading 30 or 50, and maybe, on a very few occasions, 70. I don't think I've traded 50 contracts more than 3 times in the last 3 months, close to 3 months, but I have on very few occasions. This is where you combine the end-of-day analysis into real time. You have to cross the bridge. You know, most traders, you know, sorely enough, are probably looking at some daily charts in some way, but they're really banking on 5 to 7 days with 50-minute charts, and they don't even have these indicators lined up. So what are the chances, right?
Yeah, what I'll also add is that kind of thinking is the kind of person who needs to be both working with a you and a me, because what happens is that it's very common for me to work with traders who have become successful at small levels, and what happens is they haven't built up the competence to trade at higher levels, and each time you do that, it's just a whole nother level. So basically his question is both basically methodology and technology. Here's another one for you. Is there any video training provided if we continue the monthly subscription?
We just lost audio. We just lost audio.
Off of a telephone call?
Mm-hmm.
Oh, if you can still hear me, can you send me a message? And there you
I'm
go.
not doing anything, Doris. I'm not freaking out. I'm not.
I've got you. I can hear you now. I've got
Okay. Well, let me try that again. I'm not sure what just happened. We just had a blip in the atmosphere. The question is there any video training provided if we continue the monthly subscription?
Any video training provided. There's an expert market timing course that's available, and there's an S&P 500 professional E-mini trader trading course. For those of you that trade, you know, ETF stocks, the expert market timing course is a great way to know where you stand every day in the U.S. markets. An extension of that is the S&P E-mini trading course, which has examples in real time about how to do this, plus incorporate Fibonacci retracements, applications to use them as support and resistance and high probability price profit targets, whether to the up or downside.
So there's more, but it's. And by the way, just to let you know, we're having some fairly wicked weather here, and I think that's, you know, we've got some serious thunderstorms passing through, so I think that we might have some of that. Here's another question.
Go ahead.
Do you have a course that teaches your methods and you trade with you in real time,
Okay, that's a good question. I don't have a course. I have an executive mentorship program. It's a very selective, you know, it's very, very selective, that people have an opportunity to study with me for 10 sessions, sometimes more, sometimes just 10. And then we go through the entire gamut from the beginning to end, from the end-of-day analysis across the Dow, S&P equities, E-mini futures, and then learn how to construct and cross the bridge from end-of-day into real-time analysis to identify the high probability trades and the category of those analyzed and taken independently. At that point, once a person finishes, they also get 2 weeks included in that mentorship program where they get access to the live trading room where they can basically put it all together. So essentially, they could trade right over my shoulder if they wanted to, because this morning I imagine there was a lot of people who did. The thing is that, Randy, no two people are ever going to get in the exact same time or place,
Right.
because we're all human.
Right.
No two people are ever going to, you know, take what I teach them, like what you teach them, and max it out exactly the same way, because we're humans and everybody's an individual. However, the training, whether it's the course material or the EMP, which leads to the live trading room, that is highly structured, learnable material. And
yeah, I want to comment on that because it's really important, because there's something that, whether or not the person's digging at it or whether or not they're looking for something that doesn't exist, I don't know. But the key is that I've worked with several traders who actually are in this room with Jeff while he's trading live, and they're trading together. and there would be calling out trades and things like that. It's the same thing, is that it really depends on the psychology of the trader working and where that psychology is, not some lump sum, but really it's to evolve, is whether or not they can trade in union and in step with Jeff. Because he'll look at an opportunity and it's there and he dives. He doesn't have all this hesitation. And there's a tendency, if you're not well trained and if you don't know yourself real well, that you will hesitate and you won't enter the trade. So trading live with Jeff, that is not the solution to the problem. The key is learning about what Jeff does and building the mind that can trade what Jeff is doing. I want to get that real clear. Another question. You mentioned emotional regulation lessons. Can you explain what that is? I don't see it on your web link. Of course you don't, because it's on my link, okay?
That's right.
That's right. What
That's
happens is,
right.
again, I want you to understand what I've done is that to get Jeff on the site and talk, what happens is, part of the deal is I had to sweeten the pot. The second part of the deal is that I really want people to experience what Jeff teaches. He's special, and he's available to regular human beings like you and me. And what I did is I have a pre-recorded webinar that I did, I don't know, with 100 or so people, and that it teaches my emotional regulation skill subset. And it is what I call one of the fundamental skills that you have to acquire to be able to build a mind that trades. Okay? And in that, what you're learning is you're learning about the biology of emotion, and that you don't, in fact, have a choice of whether or not you're going to have emotions or not. They're biological. If you have a body, you have emotions. But it teaches you, given that you're going to have emotions, and you're not going to buy into this pop psychology in trading right now where you can trade without emotions. It's what it's doing is teaching you the first fundamental skill of being able to regulate that emotion so that it doesn't hijack you. That's what this course teaches. And if you're going to do Jeff's work, the thing is, Jeff's going to teach you stuff that you're not going to learn anywhere else, and you'll have the keys to be able to live the lifestyle he's living. Okay? However, until you learn to regulate and build the mind that Jeff has, then that's not going to be open to you. This is the first fundamental step that you have to have, and I'm basically giving away because I'm back with Jeff at that generativity thing. Is that I want to see. To be honest with you, I have a personal grudge against corporate America. Yeah, I have a grudge. Is that I have a wife who's one of the brighter people you're going to meet. She's an MBA. She's managed millions of dollars of budgets and stuff like this. She hit a moment in her 50s where she became expendable because she was in her 50s. Okay? And I had seen enough of that already, but when it happened, it just absolutely inflamed me. And I said, how in the heck can I help people produce the ability of not being slave dependent to the system? And I'll be honest with you, I will go across the line a good bit, and that's what the emotional regulation work is about. It's a way of going, okay, I want to give you one tool that when you interact with Jeff's work, that I want you to have a leg up. Okay? Whether or not you meet me or do any work with me, that's not the point. The point is, I have met a number of traders where the only thing they were missing was the ability to manage the biology of emotion. Once they got that, they were able to do what Jeff is doing. They're not, it's not everybody, but there are a few of them, and this is there for them. Okay? That's my place on it. Here's another question for you, Jeff. I didn't hear whether you got the turnaround today, did you?
The turnaround to the downside, absolutely, we caught it. I'm the administrator in the trading room from 7 a.m. to 10:30, and then right when my shift ended, Brad Logan took over, who, by the way, has taken Rande Howell's highest level personal training. Brad Logan is an excellent trader who was trained by me in the EMP program. So we actually closed out one webinar room, mine, and opened his immediately at 10:29, and I know he was all over that. and I know that he was profitable today as well. So whether it's long or short, I mean, the room is open from 7 to 2:30. If it's a high probability trade, the turnaround is theirs to be had. So the answer is yes, it was traded and it was profitable.
Yeah, the analysis is there. It was readily available, and they were ready for it. Right. Next question. I'm sorry. Go ahead.
No, I was going to say I have probably time for maybe one or two more, and then I have a commitment that I have to go to.
Okay, here's one.
I apologize.
Do you need a different platform to use your system?
No, I've used two platforms, one NinjaTrader and the other Metastock, and either one of those two have worked just fine for me. I am both a Metastock partner and a Ninja trading platform partner.
Okay, last question.
Don't take too long. Go ahead.
What kept you from going short at the shakeout area around 9:30?
9:30. Because the setup wasn't there on the 15-minute indicators. A shakeout is a shakeout. A shakeout is designed to do exactly that. Take out all the stops that are located below the floor level, the support level at 1826.75, so they can line their pockets up, turn right back around, and head in the anticipated direction. This is common behavior on a 1-minute chart. The 15-minute charts were still solid, and the momentum was changing to the upside as you saw. And that way, when you learn to identify the shakeouts for exactly what they are, nothing more than a shakeout, that's all it is.
Yeah, you weren't willing to be sucker punched.
No, not at all. I was unaffected by that. If it had continued to move to the downside, it would have been a different story, even if it went market net neutral and, you know, some of the ratio of down closes to open closes had been in the favor of the down closes, absolutely would have considered trading short, but not under a standard 1-minute bar shakeout. No way.
Yeah, I just see a lot of people that don't understand smart money that get sucker punched. Here's the last question. Is this something we need to purchase right now, or can we purchase tomorrow or later this evening? I guess you didn't give a time-sensitive thing, so.
No, you can purchase it later tonight. It's fine. The link is should be within the chat area to the web page where you can sign up for the unlimited 14-day risk-free pass. It's $49 for 14 days is what it is. You get a chance to try it out.
Cheap. You know, for God's sake, cheap.
Right,
you know?
right. And we have to charge for the free pass because if you don't, then nobody pays any attention to it. And it's there to be paid attention to, just like this webinar. So it's a way to get to know us. Check it out. There's no risk whatsoever. And at the end of 14 days, it converts into a low monthly reoccurring subscription fee that you can cancel anytime. There's no obligation. There's no commitment. It's there for the taking if you want it. If you want to learn how to do this, it really is the best place to start, because you're going to get more information out of this report every single night than you'll get probably anywhere close, if they were willing to give it up at that price point. So I want to thank Randy again and Dolores for hosting this webinar on giving away a lot of the secrets, the guarded secrets of some of the world's greatest traders. There's a lot of very highly profitable traders who know about the smart money, but I doubt there are very many who know exactly how to trade it as we do. We're here for whatever you need, from the nightly report to the courses, possibly EMP, very selective, and live trading room. For more information on any of that, you can go to the Inside Technician website, go to the contact form, and contact Adrian Bicken, who's the acting agent, and you'll get information on that too. So once again, thank you, everyone, and this webinar will be going out to everyone tomorrow as a follow-up, so everyone will get a full copy, and you can look at this at your leisure.
How cool is that? Jeff, thank you very much, and to everybody that came and still around and stuff like that. Understand this, folks, this really is a very powerful, good trader, and what he's doing is he's sharing information about the way he analyzes markets, and what I want you to understand is that it moves beyond mere technical analysis. It really gets into smart money. So I want to tell you, I thank you very, very much. And with that, what we're going to be doing is we're cutting off. We're at our hour's end. And good night, and take care, and have prosperous trading. Thank you.